I'm Shimbang and welcome to this new video of management case study interview. The purpose of this video is to give you an understanding of how a management case study interview goes and what is expected of you. For this reason, we will be covering different genres of case study interview and different industries in those genres. So today we are doing a market entry case study interview in which our client is a European airline. This video is divided into two parts. In the first part, we'll be going through the interview and present present my understanding of it, and in the second part we will analyze the interview as a whole. For context, all the black text with blue background you see is the statement of the interviewer, and all the blue text with white background you see is the statement of the candidate. Let's begin. Your client is an European airline that is facing, just take this, your client is European airline who is facing stagnant growth in Europe and would like to explore Indian market. Please help them with this. So the first statement told by the interviewer is very important because it tells you the scope of the interview, and it makes sure that you do not miss out any point. In this case, it's quite one line, but if it's a long statement, make sure you don't miss out on any points told by the interviewer in the first statement, because he might drop some hints of where you have to look for in the interview while analyzing it. So let's mark the important things in it. So it's an European airline, stagnant growth in Europe, and exploring Indian market. Okay, so this is a market entry case study interview, and market entry case study interview is divided into three parts. In the first part, you try to understand more of the client's objective and business part of it. In the second part, you do the analyzing, market sizing of what is expected of you, and in the third part you provide recommendations and suggestions. So right now we're in the first part where we will understand more of the client's objective and its business. To clarify the objective, our client wants to explore Indian market to expand its airlines business as Europe market is not growing. Yes. What is the primary objective of our client? Do they have any profit objectives for entering India? They don't have any they don't have any immediate targets, but are looking for long-term growth. So they're looking for long-term growth, not profits right now. Okay, I would like to further get to know about the client. What kind of airline are they? Where all are they operating? What is their current market position? Do they have any particular target market to enter in India, like domestic or international sector, low cost or premium, etc.? Our client is a low cost airline company in Europe. They are operating in most countries across Europe. They don't have any particular market in mind, and you can suggest them the same. Okay, so no particular market. Okay, I will also like to know current Indian market scenario. Can I assume it to be current market scenario in both domestic and international markets? Yes, domestic market is majorly 5 to 6 players with Indigo having maximum market share. International market have multiple players with Air India having maximum share. Okay. Okay, I will like to lay out my structure. Okay, so now we are moving to the second part where we will begin the analysis for the interview. I would like to lay out my structure. I would first like to see financial attractiveness of the market. If market is enough attractive, I would like to see operational feasibility in the market, where I would first check if there are any major barriers preventing our entry, and then check how will we able to establish a value chain. I would then like to look how we can enter the market and any future risks that we'll face in the new markets. So very standard procedure which has been followed in case study interviews. For you look for two things. First is financial attractiveness, how much money you can make and what is the ROI from the point you start with, and what is the operational feasibility. And then it's also very good to give a roadmap of how to enter the market. That's why you can, after doing the initial check of financial attractiveness and operational feasibility, you also give a plan of how to enter the market. Currently, tells you that tells the interviewer that you're not just thinking theoretically, but on ground, how would you actually implement things to begin or enter the market. The structure looks good. Let's look at financial feasibility first. Okay. Okay. In financial feasibility, I would like to analyze market size, market share, and profitability we can achieve. I would also look at the growth of the market. As our client is already in low cost airline, low cost airline, I would first like to evaluate them entering into same segment. So I will first like to evaluate if the client enters Indian domestic market in low cost segment, and then evaluate the value and other opportunities like flight between India and Europe. Makes sense. For simplicity, let's assume that the client enters domestic market only. Also assume that the client first target major cities only. Okay, target major cities and domestic market only. Okay, to calculate market size, we can approach by calculating traffic on major airports by looking at the number of flights taking off and its number of. Okay, so we are calculating first market size. We are doing that by looking at what is the traffic available at major airports. Okay, so first we are doing number of flights taking off into number of passengers per flight into price price per ticket of an year from major airports. So okay, so that's how you calculate the total money which can be made as total number of flights into number of passengers into flights per, into price per ticket. Do we have any data regarding the market size, or should I calculate? Okay, it's fine. Let's assume that the market size is 50,000 crores. So also it's very important that you don't jump into calculation. It's the interview wants to know that you can think it through of how to calculate it. If you can tell the approach that this is how I'm going to calculate it, it's good enough. Or else if the interview asks you know to perform the calculation, make estimates of different values, then you go ahead and do that. Okay, now I would like to analyze the market share. Okay. What do you think about the market size? Is it attractive? For now, I would. Okay. So before moving to market share, let's see if 50,000 crore is attractive or not from interviewee's perspective. For that, I would like to know the current revenue of our business. That is 5 billion. Okay. That's equal to 5 into 70 into 100. You converted bill dollars into rupees. It's 35,000 crores. I think the market can be attractive if we are able to capture good market share of it. Also, you forgot the growth is our primary objective. You didn't ask earlier, but we want a sustainable growth of 1 to 2% on an overall revenue. So very important that the client has the interviewer has mentioned that the client is looking for long-term growth. So in terms of answering is the market attractive for clients, you have to make sure that you don't forget this point, that what attractive in terms of what exactly is the client looking for. So in long-term growth, it could be better if you have asked to answer market attractiveness. I want to understand the growth of this industry, and that would give you an idea that you are keeping things in mind of what the client is looking for. But yeah, so the client is looking for 1 to 2% overall revenue growth. Okay. Okay. Do we have any data about the growth of Indian market? After calculating the market share, I will verify if you are achieving the required growth or not. Sure, Indian market growth is at the rate of 20%. Okay, I will move on to market share. I would like to compare the market share we will target, the kind of facilities we will provide. Market share, the kind of facilities we'll provide, and the prices we keep, and if our brand name is known to Indian market. Do we have a data for this? The client currently haven't planned this and would like your advice. How else can you calculate the market share? India, being a low income country, is price sensitive. So we have to keep competitive prices in order to gain market share. Also, as we are targeting major airports, so we will be able to reach out to most customers. We can look into the past players that entered into the Indian market to benchmark our market share. Good. Assume Vistara to be a low cost carrier and was the last entrant. They have been able to gain 5% market share. Apart from this, what other benchmarks could you look into? We can further look into if our client has entered into the new territory similar to India and how they have performed there. Also, we can benchmark it if any other low cost airline which entered into any similar market. Okay, so you are using comparison to figure out your market share rather than doing the calculation. Good. Let's assume that you will be able to gain 5% market share. Sure. So now we see sustainable. So now we'll see sustainable growth. We will be able to earn a revenue of 2,500 crores in Indian market that will grow minimum at 500 crores per year, assuming that our market share remains the same. This means that we have a growth of around 1.5%. Thus, this market share seems meets a target growth rate in Indian market. I would now like to check the operational feasibility. First, do we know if we will be able to get license to operate in India? Okay. Okay. Uh, we will be able to get the license instead of going for operation. We will be able to get the license, so that is clear that we won't be blocked for getting the license. Instead of going into operational feasibility, I would like to know the factors you will judge to decide how to enter into Indian market. Okay. To enter into Indian market, we have three choices, including enter on our own, enter through a joint venture, and or through merger and acquisitions. To decide on these factors, we can look into cost, control, operational feasibility, and time. That sounds good. What are the options for us if we want to enter through mergers and acquisitions considering Indian market scenarios? Okay, so let's go with M&A. Currently, there are multiple airlines in India that will be ready to sell their stake. We can look forward to invest in Jet Airways, Air India, etc., which are looking for buyers. So, just a little step back. So, a pretty standard way of entering a market is you launch your own, or you go in a joint venture project, or you go for merger or acquisitions. So, pretty standard theory. The interviewer asked, let's go for mergers and acquisition, and to enter in, a lot of Indian airlines are looking for buyers, so that would be a good option to buy them. Okay. Okay, so let's assume that we will buy Jet Airways. The cost required for acquisition is 1 billion. Can you evaluate the investment amount? Do we have required cost of capital and profitability of business? Assume the cost of capital to be 8% and profit margins to be 10% and time period to be 10 years. So as we calculated earlier, we will be able to generate 2,500 crores of revenue in year one, which will grow at the rate of 20%. This means that we have profits of 250 crores in first year, followed by 300, 360, and so on. So an investment of 7,000 crore. Thus, we can evaluate net present value and payback period to establish the investment, if the investment makes sense or not. Oh yes, okay, but don't forget to take in the factor of increase in market share due to acquisition. Oh yes, we also have to see how brand names of Jet Airways can help us in acquiring more market, thus increasing our revenues. You can close the case now. So we didn't go much into calculation, but we presented that we understand the concept and we have to look into these factors if you want to calculate the market share. Um, a return on investment, or how much time it will take for us to generate profits and recover our investments. And it was not asked by the interviewer to go deeper, so we closed it at this case. Pretty good case. The candidate was able to keep track of things told by the interviewer and go in a structured way to answer his questions. Now let's move on to the second part of the interview, where we'll analyze the interview. Okay. So it's very important to maintain clear notes, because at the end of the interviewer will ask for your notes, and he should be able to understand everything in one go. And you should maintain it in a structured manner to show a structural thinking, rather than thinking and just list with no structure of where we are going. Okay, so interviewee notes. Important to ask questions about qualitative and quantitative objectives, especially about growth. Define the scope of the problem as it was open-ended. Identify company's current type of airline, operational countries and market position, revenue, etc. Competitive scenario of Indian market standard. Case facts: client is European low-cost airline who wants to analyze Indian market. One of the big brands in Europe wants to focus on growth in revenue through Indian market. Open to options of entering into different sectors in Indian market. Open to suggestions on how to position the product price and promotion, etc. Okay, so this is the approach where we were divided into financial feasibility, operational feasibility, and how to enter the market. In financial feasibility, in current you have market size, market share, and growth. In market size, which is current market, market sizing is calculating domestic airline size, bottleneck approach, 50,000 crore, and growth is 20%. So bottleneck approach is you figure out how much flights, what is the point at which you can look at to calculate the market size. So you figure out how much planes are there, how much passengers are traveling per plane, how much tickets you calculate, and multiply this, and you get the total market size. In market share, which was 5%, you see what are the major players, what is the market share, positions, product, USP, price, airport place, brands. You see the benchmark, what is the last entrant, similar countries, you compare it to figure out how much market share you can capture. And growth, you calculate it by taking the total market size into total market share into market growth divided by total size of the airline market. So in terms of operational feasibility, what are the major barriers to entry? There are no government regulations. So you look into government regulations, license rules, and FDI approvals. We were given a green light that there were no issues and such. And value chain and setup and risks, you have government license, airport setup and gates permissions, infrastructure development, employee sales. We are told to not go into operational feasibility, but if we were, we would look into these factors. In terms of how to enter the market, the options were self, joint ventures, and M&A. We were told to look into M&A, mergers and acquisitions. The evaluation criteria would be cost, control, operational ease, and time. In terms of seeing how factors which you have to look at to enter the market, and where all we have to work if you want to enter the market. In financial evaluation, you see the net present value, the payback period, and internal return rate. Okay. Yeah. So the recommendations given by the candidate were the airline should enter the Indian market as meeting its growth targets. As it is meeting its growth target, it has from entering Indian market, which is 1.5%, between 1 and 2%. The airline should not acquire Jet Airways as the overall net present value of the project is negative. The airline can enter the market by itself and look for joint ventures, whichever net present value is greater. Okay, this part was not discussed, but if you have gone down in the calculation, this part might come up, which makes out Jet Airways net present value is lower, so in negative in fact. So going with joint ventures is beneficial. What are the key learnings of the interview? Market entry generally don't come with the growth objective. Keep the objective in mind while asking interview questions. Check once if there are any quantitative targets interviewer is looking for. Conclude each analysis once it's completed. Example, after market sizing, conclude if the market size is good or bad and should be further analyzed depending on the. Very important that after every analysis you provide a conclusion in between of the interview also, not just at the end of the interview, so that you also keep track of where exactly is your uh, direction of the interview going. Apart from analyzing 4Ps with respect to competitors in market share, do a benchmarking analysis and try to come up with a better market share percentage. Okay. Recheck earlier calculations if you have any information is provided. If you have a new information provided in the analysis, example Jet Airways brand. Don't worry if the case is long. Always keep up patience and look at each bucket individually. Okay, so it was a pretty good case study interview, and I hope you learned a lot from it. Uh, if you are looking to build into career in consulting and are worried that you might not be able to crack case studies or case studies make you nervous, do follow this, subscribe to this channel and watch all the videos, because what happens is if you see a lot of different videos covering different industries and different types of case studies, you get a general idea of how to navigate through case studies, and given any case study of any industry, you know how to navigate it thinking from first principles, and you won't be worried about if you're given a case study where you have not of an industry where you have not worked on. So do watch all the videos I've uploaded of different industries, and do subscribe to the channel so you don't miss out on any video. And with that, I would like to say have a nice day and thank you for watching till the end.